Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today, I'm going to show you a free and fun tool to help you to visualize the stock market, to see what is going on, and it may help you to understand what you may or may not want to invest in. This is what's called a heat map, and again, it shows you what's hot and what's not in that particular day. So I want to show you this on Yahoo Finance. Yahoo Finance is not the only heat map in the world. There are plenty out there and the majority of them are free. I'll also talk about some of the limitations of it and some traps that people tend to fall into. So let's go ahead and do a screen share real quick. Again, Yahoo Finance, you can see stuff like this all the time. Again, like FinViz, FINVIZ has one. That one's a bit more popular. I just use this one because it's just easier and a lot less cumbersome. So first things first, go up to screeners and hit equity screener. Let's see if it's gonna work for me. There we go. All right, so it brings up the equity screener. And what a screener does is screen stocks. And basically when we say that, we mean to tailor this search to look for the things that we want to look for. So if I am scrolling down, I don't know who Kevin Pruser is, but if we are scrolling down, I want to look for stocks that are in the US. And perhaps I'm looking for all stocks and just see what happened in the market today. So I'm going to hit all of these, and we'll probably do a video about what large, small, medium cap, and all that kind of stuff is if we haven't done it already. And then I'm going to go down here and hit find stocks. Now this should pull pretty much every stock in the US because I told it to, right? I want stocks in the United States. I want all sizes. All right, so it brings me a list of 13,928 stocks. So when we talk about choosing the stock that is best for you, this is why it's hard. There are a lot of options out there, but we can simplify this and really tailor this down. Now, one thing that we talk about, the visual part, the heat map part is this. Hit heat map view. Now this shows us very quickly what was up today and what was down today, and shows you what the biggest companies are. Obviously you got Apple here, and I've talked about this before. We talked about, what was it, the top 7 or 10 stocks make up 30% of the market. You can really see that here. You got Apple, Microsoft, Google, Amazon, Tesla, Nvidia here, TSM, Taiwan Semiconductor. You pretty much know the majority of the names on the left hand side of the screen. But I could easily look at this and say, well, number one, I know the market was clearly up. There's more green than red. Apple was up pretty big today. I can see that Berkshire Hathaway had a good day. JP Morgan had a good day. And the darker green shows even better number. So even though this is a smaller company in comparison, that Intel, INTC, is up 4.37%. Wells Fargo is up, BX is up, AMD is up, and then whatever BHP is, again, I don't know that company, but they were up pretty big today. So this is a quick snapshot view. How did the market do? I can look at this and boom, it was up, with a few companies up significantly. So what they have here, you can see this. This shows, 6% or more is really good, and then obviously 6% or more in the opposite direction is pretty good. So what was the worst stock of the day, or one of the worst stocks of the day? I can go here and see that Charter Communications was pretty bad today. We can click to it and see why and things like that. But the first thing is, this tells me how well the market did. It shows me contextually how big some of these companies are, and just puts more emphasis, more visuals to it, instead of saying the market was down 10% today, or ooh, that would be terrible, but the market is down 5% or whatever it is. I can quickly see, boom, the market was up. Tech was clearly up. And there were a few sectors here. It looks like financials were up pretty big today, because this is Charles Schwab, right? And these are the things that you can glean from this, right? So and I haven't, did my daily reading at the end of the day, so I don't know exactly what's going on here. But just visually, I see Charles Schwab is up. I see Wells Fargo is up. Let's see, Pfizer was up today. So something with financials is happening. Something with everything, I could say that too, because most things are up. Something with Pfizer was up today. That's pretty good. But that's just quick things I can just easily pick at. Now I can really tailor this down some more. So let's say I'm really looking at those large companies. Larger companies are obviously the ones you'll see, the ones that you know of and you've heard of before. Hit find stocks, and it should pull up here in just a second. There we go. All right, and then go back to heat map. Now the reason why I tend, not all the time, but I tend to move towards the mega cap stocks and the larger cap stocks is because these are the ones that tend to have less risk and they're companies you know and you can research a lot easier. So for example here, we're talking, we went from 19,000, let me go back here. We went from 19,000, now we're at 1,900. So we've cut out a lot of those really small companies. Also, when you talk about those really, really small companies, you run into a lot of penny stocks and companies that don't always have their stuff in order, okay? All right, so here we go. And again, the information for some of these is the exact same, but this is where we talk about like the S&P 500, right? When we talk about the market, we are usually talking about these larger companies that you know of, that you've heard of, and can kind of give you a better direction of what's going on. Now, how do you use this other than is the market up or down? Another way you can use this is if you're interested in a company and you want to see like, hey, what's going on? Maybe I'm looking at AMD. I can click that, see what AMD is about, and decide whether or not I want to invest in it and see what's going on. What I like to do too, it is great that you're on Yahoo Finance to do this, is that I can go and read more about it by simply scrolling down. And that's the big thing. A heat map is not a one-time, one-size-fits-all where I look at it once and immediately decide to invest. It does not work that way. The reason it doesn't work that way is because one, it just shows you one day's result. It is not over time. Okay, that's just one day's result. It is not over time, so it doesn't give us a comprehensive answer. However, if you're on Yahoo Finance and you see that, you can click here, right, and then get something over time by going to hit a year. How well did it do over the past year? How well did it do over the past 5 years? What I like about Yahoo Finance too, I'm giving this tip for free, is go here, hit full screen. I'm able to compare maybe two companies that I saw previously. So I can hit full screen. It should pull up here. Usually when I'm gonna do a screen recording, sometimes it lags. And there we go. Here's AMD over the past month. I can hit compare. And what's another company that we saw that was up? Let's see. I think Charles Schwab is, I forget what their ticker symbol is. Let's do Apple because I know that was a large one on there, right? And I can compare it to Apple and then see how the two did over the last month, right? And I can change the time frame and do whatever it is I want to do here. I can go back. And when I go back, I can scroll down and see, well, why, right? Why was it up today, close to 4% or whatever it was? And I can, again, scroll down, see what I like, may not like about it, and then continue my research, right? So you can hit news. It keeps bringing me back up for whatever reason, but you can go and hit news. You can go to their financials. You can see what other people think under analysis. I don't put too much stock and value into that, but you're able to do that. So I'm gonna go back to the heat map. And these are just a few things that you can just pick at to just understand the market more. And again, it's a lot more visual and it's a lot more free, meaning it's totally free. But it's just one way to understand the market, to see the market, and then tailor things down to what it is that you are specifically looking for. So now, let's say that I am only looking for small cap companies and medium cap companies. These are, again, if you think Apple is a very large company, and it is, it's a mega cap stock. It's $1 trillion company, depending on what day you're looking at it. Let's say that I only want smaller companies. I don't want large cap. I want, small companies that I think have more room to grow. That is the quote unquote beauty of small cap stocks. They are, think of it like if McDonald's is a large cap stock, and it is, then Wendy's, right? You don't see a Wendy's everywhere, but you do see a McDonald's everywhere, even internationally. I have not gone overseas and saw Wendy's. Not in Singapore, not in France, not in London, nowhere in the in Mexico. I haven't seen it. Now, that don't mean it's not there. I'm just saying I wasn't really looking for it, so I didn't see it. But I did see a McDonald's in France. I did easily find a McDonald's in London, whether I wanted to go to that spot or not, but it was there, right? So go ahead and hit find stocks. And you can also think of it like a Starbucks. Like, you don't have to look for a Starbucks. A Starbucks will find you, especially in New York. But you have to go and find small cap companies from time to time. All right, so scrolling down, I'm going to go ahead and hit heat map view. And again, these are smaller smaller stocks. You can see, look, they're smaller squares, right? And I can go through, and this is for small cap stocks, it's a little different, right? You can see and that a lot of these were significantly red. This is down 5%, whatever that is. This one's down 16%. This one is up 20%. And this is the risk and the danger sometimes of small cap stocks. Now, over the long term, research has shown us that small cap companies tend to outperform large cap companies. That's because, again, they have more room to grow. There's more room. And I'm picking on Wendy's because it's a company we all know. Y'all don't know most of these here. I don't know most of these here because they're so small. But they usually have a lot more room to grow. Again, we saw a company that was up, was it 20% or something? Yeah, this company right here, up 20%. But again, look at it. It's only $9.11. So some of these could be penny stocks. Penny stocks are very, very risky. So you have to really pick through and see which ones make sense, which ones don't make sense. Like this one is $3.18. I don't trust that, man. I don't trust that at all. So you're taking more risk with a lot of these smaller cap companies, but you can also grow better. These tend to be more volatile, as you can clearly see. The market was up today. You saw how the majority of the companies in the large cap category were green. And I don't think there were any that were in this deep red category. You saw some red, but these are pretty bad. And you can see that it is a lot more often here. So they tend to be more volatile. And I like looking at it this way because I could have just told you that with no visual aid, and this conversation would have went a bit different. We'd be like, I don't really get it. Now you get it. All right, so that's just a heat map. That is just one of the many heat maps that are out there. This one's obviously on Yahoo Finance. They don't pay me to say that. They should pay me. Perhaps I should reach out. But just one way to visualize the stock market. It can help you to understand, like, some companies are riskier than others. These companies are doing well, and you can start to kind of put together trends to see what works, what doesn't work, and then most importantly, dig in to do more research. One last thing that I'm gonna show you. I'm gonna go back to the large cap and mega cap stocks. I'm, kind of pulling from, riffing. This wasn't planned. Hit find stocks, and there are more things that you can filter. Do you want a particular industry or something like that? You can definitely do that. Okay, so heat map view, and because these are large cap, so let's say we're looking at a S&P 500 index fund, and why when we do the grade your portfolio videos and sessions, I talk about duplication, because let's say this is the S&P 500. That's not a guarantee. I don't know if there are 500 squares here, so we're making a broad assumption here. So number one, what do you notice? Notice there aren't a whole bunch of deep red squares. Again, these are less risky. They're already established. Apple's not going broke no time soon. Whereas a company that is only $9 a share, it don't take much for you to lose all your value, or at least half of it, right? So that's number one. Number two, let's say this is the S&P 500. You can see if you have the S&P 500, a lot of it's going to be in Apple. A lot of it's going to be in Microsoft. A lot of it's going to be in Tesla, Amazon, Facebook. We talked about that. JP Morgan. These are the things we talked about. It's already weighed on just a few companies. Of all of these stocks, the majority of it is visually within rows 1, 2, and 3. That's it. That's what, a third maybe? And then, so if I own the S&P 500, I've got a lot of money there, and then I'm also owning a bunch of Apple, a bunch of Microsoft, so on and so forth, that can hurt me if, keyword, if these stocks don't do well. Now, if they do well, then I'm doubling up. I'm doing even better, right? So you want to be very careful there, especially if you have an S&P 500 fund, which we saw. Then you have QQQ, which is the NASDAQ tech fund, which is going to have even more Apple, even more Nvidia, not JP Morgan, even more Google. Then you're tripling up this, where you have the stock itself and one index fund that has this, then another index fund that has this too. So you got to be careful about that, and this visualization can help you to see that a bit better. Now, the last thing that I'm going to talk about as I'm thinking as we're doing this video, which is probably not the best thing, maybe I should follow a script. Not me, is some of the things that you can narrow down. I'm not going to go through all of these, but if you're someone who's into a lot of the valuation metrics, which I am personally not into, you can go here and click these things off, saying that this is earnings before taxes. Maybe I'm looking at a company that I want to have cash. I don't want unprofitable companies. Perhaps you can do that. Perhaps I'm looking for a company that has low debt, and they may not be impacted by interest rates in the same way, because you don't have no debts. Interest rates can go up to wherever they want to go up to. I'm not paying it, right? Because I don't have no debt. Then, or the company rather doesn't have any debt, then you can click that and do what it is you want to do based on those things, based on those companies. So these are just some of the things that you can do. This also, I just saw this, the ESG score. This is environmental scores that you can say, look, I want to choose companies that have, you know, great environment, you know, they're kind to Mother Earth, kind to the environment. All right, so let me know what you think. Again, super easy tool. It is not the most comprehensive in and of itself. Okay, so I would not tell you look at a heat map and then go invest. Would not do that. I may look at the heat map if I just want to know what's going on in the market, see what's going on, and then say, click on one of these and do that 3-step research process. We got an entire video there. All right, so that is it for me today. I got some more stuff that we need to talk about. I think we have one more grade your portfolio video. We'll see if we can get to it this week. If you have any more questions, comments, thoughts, let me know in the comments below. All right, that's it for me. Oh, before I go, make sure that you are on the email list. That's a little call out option box that pops up at the end of every video. That is how we can keep in touch. It's really important. But also I send out news, notes, giveaways, stuff like that. You want to be on the email list so you can stay in tune in case you miss a video. You are less likely to miss a video if you hit the like and subscribe button. You want to do that and turn on the notification bell and do all those YouTube things that people be telling you to do. I'm telling you to do that. All right, that is it for me. I'll talk to you guys later. Bye.